Taxpayers and tax enthusiasts, welcome to the Digital Transaction Tax session. I'm Bharath Kunjibettu. I'm a dedicated data engineer in a leading digital technology company. I'm deeply passionate about data and its intricacies, and I constantly strive to build end-to-end data solutions to help customers derive meaningful insights out of data. Now, before I deep dive into my session, I want to express my gratitude to Taxguru for this wonderful opportunity. I urge you all to please ensure that you have completed the prerequisites, which was mentioned in the webinar description as well as in the webinar invite. This would help you get a stronger hold on digital transactions and gain a deeper understanding of how this can disrupt direct taxation. So let me move on to the next slide. I'm very excited to share about this digital transaction. I call it even a conscious as well as a revolutionary case study. It is a conscious case study because it's in a very small percentage. It's a revolutionary case study. You will see in the future slide how it's disrupting both the direct and indirect taxes. So before we identify the solution, why I had to come up with digital transaction tax. So what were the things about direct tax that most of us are not happy about? So the very first thing is there is a lot of time lost in tax consolidation. Even in the official portal, there is no information of FY22, FY23 data. And March 2023 has already crossed. And there is a lot of other things as well, like your TDS happens in your salary, but when you have to file, it's almost 1 year gap. And same way with the refunds also. So due to these problems, I was looking out for a system that is more automated and which will consolidate information faster. Now, this is a very concerning point. High net worth individuals are relocating to other countries, which has better tax laws or which has a better infrastructure compared to India. A high net worth individual is someone who has a net worth of 5 crore and above. And because they're moving out, each high net worth individual is probably equal to a 40 average salaried person. So when such a huge wealth is leaving India, it is a very important reason to be concerned about. Now, if I have multiple income sources, and today having passive income is so important, and I won't say so important, is also a hobby. So trying to consolidate this information is going to take some time. I'm sorry, I didn't start my video. Consolidating multiple income sources and applying ITR laws is again going to make things more complex for an average salaried person who also has to take care of his regular work and other responsibilities in addition to filing income tax returns. Now, as per CBDT, or the Central Board of Direct Taxes, they say that only 3.3% people are paying taxes. Now, 3.3% is a very, very less number. In a 140 crore population, only 4.2 crore people are paying taxes or direct taxes. And how burdensome it will only get more burdensome if this percentage does not increase. The national debt is almost 8 to 9 times the direct taxes. And it is 152 trillion INR right now. Or when I say trillion, it's lakh crore. 1 lakh crore is equal to 1 trillion. So in FY21-22, we managed to collect only 17.65 trillion, and national debt itself is at 152 trillion. So how digital transaction tax or DTT can become a game changer? So we'll have to understand this at two perspectives. One is at a high level. When I say high level, it is okay, government has put this much of declared so much of digital transactions value or worth so and so. So on this, if I put 2% digital transaction tax, I'm getting this value. That is a high level comparison. The next level is also called as at a transaction level or as a passbook entry level. So whenever you go to a store, you scan the QR code and make your payment, it becomes an entry in your passbook in your bank statement, right? So even at that level, I will show how digital transaction tax can be very efficient. And even at a very high level, I can show how it can disrupt the existing taxation. So real data, real growth, and real data, real growth with FY 21-22 data. So what I'm trying to tell here is financial year 21-22 information. I have considered it as a baseline. Okay. And only in this slide, I have said indirect tax is not considered. I didn't want to consider just to show the domination of digital transaction tax. And as per media reports, you can see that 28.53 28.53 trillion cash was in circulation. So what I'm assuming is this is the amount that has been withdrawn from the banks or through the bank ATMs. Okay. So if you levy digital transaction tax, people will choose cash transactions because you need to put cash transaction tax to discourage people from using cash and going back to digital transactions. Right. So that's the whole intent behind showing how this is effective. So just take a look at these numbers. Okay. All these numbers, you can find it out in the internet. And I can show you towards the end of this slide, the source of these particular sources of information. Our net direct tax collection is only 8.088 trillion, right? Now 8.088 trillion, and you see digital transaction tax 3020 trillion was the total worth of digital payments. If you have seen the prerequisites, you would have already seen this particular information. So if you levy 2% on 3021 trillion, it will be 60.4 trillion. And the estimated cash transaction tax on 28.53 trillion makes it 1.14 trillion. So if you add this, you just see the comparison between the two. Clearly, it's such a mammoth tax number, or it's so dominating. You need almost like 7.5 times of direct taxes and even like 6 times of indirect taxes, or maybe 5 to 6 times of indirect taxes. So in comparison to 17.651, 61.51 trillion is 248.5% more. And this is just the beginning. You will be more surprised in the future slides. So I'll move on to the next slide. So like I said, I showed you at a high level. Okay. Now I'm coming to the transaction level or a passbook level. So let's take one purchase as an example. I am based out of Bangalore and I buy something online from a merchant based out of Haryana, and it's a goods worth 1,000 rupees. So as per digital transaction tax model 1, right? What you're telling, you charge 1% of this 1,000 rupees on me, and you charge this 1% of 1,000 rupees on the merchant. This is more amicable tax distribution methodology. But again, I have one more method. I'll share about that as well. So now, if we take into account of 50-50 ratio between central government and state government, the tax is uniformly distributed. And so basically from a passbook perspective, DTT model 1 is 1% of your deposits plus withdrawals. Okay. So definitely if you're having a bank account, your withdrawals cannot exceed your deposits. So if we use this approach, the deposits 1% plus withdrawals 1% is your digital transaction tax. So I will move to the next slide. So in here, in DTT model 2, you see the same purchase is happening. Okay. But if you notice, the merchant is charged 2% tax because he's getting the money or cash inflow is happening to him. I'm paying the money. So I need not pay digital transaction tax. So, but if you see here, the money does not get distributed to both the states. It only goes to one state. In the previous case, it was going to even one more state and it was going to Haryana like that. So from a passbook perspective or from a transaction perspective, this is close to 2% on your deposit. Okay. So I'm actually viewing on two screens. So if you see me away from camera, it's just you can ignore it. So now what we can ask the government, right? I have shown you how dominating digital transaction tax is already, and most importantly, whatever analysis I have done, I have presented it to the government and government has acknowledged it as a suggestion. So what I'm eventually want to ask government is, we need a reversal of ITR returns. Okay. ITR returns is the one which is, in terms of bookkeeping also, it is maintained in a very organized way by the income tax department. Okay. So because of that, it's very easy to trace in every year how much income tax returns you filed and how much refunds you can ask from the government. I am not asking any requests on the indirect tax because indirect taxes, it's not recorded anywhere. If you go to a shop, you pay GST and that's it. Maybe your bill is telling that you have paid GST, but GST is maybe the vendors only have to file. So due to those complications, I said no need of to do anything on the historical indirect taxes, only reverse the direct taxes. And then we are telling you, you just don't refund this. You levy digital transaction tax on all historical transactions from 2017 to 2018. Now you will wonder, how is that possible? So to explain that, I'll be moving to the next slide. How we can file digital transactions. Okay. And please note this particular slide that I'm sharing. It's a very important slide. This slide you would have seen probably in all my prerequisite documentation. And what is happening here is I have taken two sources of information. Okay. So financial year wise, digital transaction value. You can get this information on the internet. It's very easily accessible. The digital transaction tax column, just 2% of this. If you do 2% on this particular information, you get this numbers. Fourth column. And this is telling current revenue is our net direct tax plus net indirect tax. And this has been our tax collection year on year basis. Okay. 12.42 trillion, 13.17 trillion, 13.57 trillion or 13.57 lakh crore. Now just see, even though from 2021 to 2022, there has been a good growth, Just notice our national debt. You see how high it is? As of 2024, it is expected to grow to 169.4 to 170.55 trillion. Now, with our existing tax collection data pattern or the tax collection pattern, can we really repay our debt? The clear answer is no. We can't repay our debt with the way we are collecting our revenue right now. And this is not only disappointing because we as taxpayers are paying huge amount of tax, and we are not really seeing that benefit occurring. And this is only going to make India weaker economically, because since we are unable to pay taxes with our tax revenues, there will be more push for FDIs and public private partnership, and thereby we will be more, India as an economy will become more vulnerable, and we have to seek assistance from other countries to help clear this debt off. So out of this net direct and net indirect taxes, you can see here clearly digital transaction taxes is really dominating compared to the current revenue. So in that direct tax, we have also collected separately that information, and you can see it has been like 6.22 trillion, 6.75 trillion, and so on. So even direct tax is not doing much. So let's understand the projected revenue. Projected revenue is nothing but the interpretation of my previous slide. In my previous slide, I said, you give us ITR returns. So giving us ITR returns back is subtracting direct taxes. You levy digital transaction tax. So that is levied. And then we are not touching indirect taxes. So that formula is proposed transaction tax plus current revenue minus direct taxes. You see the numbers is so high. Don't you think with just last 3 years of data, we will be able to repay our debt and still have something in excess? Now, let's take, so this is mathematically possible. Now, let's say theoretically that 10% of this amount we are not able to recover because that person might have expired, that person might have moved to another country, or any other reason his bank account is not accessible. So that time, even with that 10%, we are able to repay our debt and still have something in excess. So I want you to just imagine, like, we are seeing even though we are not, even though the tax collection is so poor, we are seeing a good amount of investment on infrastructure. But when the tax collection is so high, definitely it will be positively reflecting on making investing on infrastructure possible without having to rely on any kind of IMF loan or World Bank loan. So continuing the visual insights, you can see this this current revenue, you can see it's almost flat. The projected revenue is shooting up and then it's getting flat, but just see the distance, guys. This distance is what makes digital transaction tax a very big differentiator. Never in the history of India's tax collection we have seen this kind of an disruption. So I have, so just give me 1 minute. So I showed you at passbook level. I showed you high level. Now this slide is about a salaried person, many of the salaried person, and we are making an assumption that everything is a digital transaction. Okay. So this is my friend's data. So he has given me his approximate income tax return that he files, and he has told me what is his salary and what is his expenditure. Okay. So assuming that all are digital transactions, you will notice that as per ITR returns, he's paying 7 lakh tax for a 42 lakh income and a 30 lakh expenditure. But as per digital transaction tax, you see how less it has become for a single individual. It's become 72,000 only. 72,000 in comparison to 7 lakhs is 90% of tax savings. So instead of believing me completely, if you are filing income tax and you're having a TDS, you can also take your tax examples. And let's say that even if you're earning 10,000 per year, the tax ask will be like, just 100 rupees. So clearly digital transaction tax, because we don't have any kind, in my case study, I'm not putting any slabs. So because I have not put any slabs, the possibilities are immense, and the kind of burden of tax is reduced significantly. So the next slide talks about how we are going to get benefited. So I'll just flash the points. I think I've covered it in my previous slides, most of the things. If your bank passbook is considered as a source of information for tax deduction, it will be an automated process. Bank has to just give you some kind of a notice stating that this is your deposits, this is your withdrawals, and for this quarter, this is your digital transaction tax. I have shown 265 to 387% collection. So I can go here. You see here there has been 265% increase. Okay. Look at this. This is 387% increase in tax amount. The year is financial year 2020, right? So clearly I have shown how more tax revenue for government, less tax for taxpayer. It was shown in the previous slide. Ease of business is easily achieved. So whether it's a small shopkeeper on the footpath or a storekeeper in a very big mall, for all of them, the taxes will happen in the same fashion. The tax deductions are going to happen in the same fashion. So they don't have to spend time hiring a CA to do the tax consolidation work. HNI retention will be easily achieved. Why it is easily achieved? Because in the previous slide, we said that they were leaving because they are paying high taxes and they're not seeing such infrastructure growth. So they're moving to a country where they have relaxed tax laws and even the country is growing. But the same possibility is available now through digital transaction tax. So you might be wondering how digital transaction dominates so much, right? So as per sources, again, the information, when I say as per media reports or when I say as per sources, it is an information from the internet. Maybe there will be variations to it, but I'm not, but I'm very confident that this information is correct. So 1.1 billion bank accounts are operating in India right now. Okay. 1.1 billion bank accounts means that it doesn't mean 1.1 billion people hold bank accounts. It just means that multiple people can hold one bank account, and single bank account can be multiple bank accounts can be held by one person. So 87% of them have actively indulging in digital transactions or monetary transactions. So that reflects on the digital transaction footprint. Um, and yes, this is a very important point. For a single transaction, there is a limit of 1.1 lakh INR, 1 lakh INR for the buyer and 5 lakhs INR for the seller. Okay. So the digital transaction tax comes under bank transaction tax. There are bigger tax transactions happening at a bank level, but I have not considered them because I just wanted to see how I just wanted to explore digital transaction taxes. So most importantly, this is the disclaimer that I want to put forward is it's a conservative percentage. This percentage, I have just put 2%. Okay. The government, even if they say they consider it, they can put it to whichever percent they like. But I shared, if you put 2%, this is what you are going to get. So in my case study, I have put a very conservative percentage, and I have ignored indirect taxes. So government can change it however they want to. But definitely that is up to them. So I cannot define that. I cannot predict that also. But yes, this is a case study. This case study has shown its capability in helping India clear the national debt. That is most important, and also have a surplus in tax revenue collections. So without grievance, all I can say is my slide is a nice story, a nice analysis. But if you have to really make it work, you have to make use of Right to Prime Minister portal, or you can post in MyGov. So it's very clear that this grievance should go to the finance ministry or to the revenue ministry or to the income tax ministry or directly to the prime minister. Then only they will consider. And I have already done my bit. So for all of that, I have got an acknowledgement as a suggestion. Suggestion can only become action item when a lot of people file together. Potentially, there are 8.4 crore people who are affected by direct taxations or income tax issues. So if 8.4 crore people come together and file a grievance, it will definitely ring a bell in the government office. So when I started digital transaction tax, I didn't consider any gender, caste, creed, or religion. But if you are a taxpayer, irrespective of your caste, creed, or religion, you or gender, you would be liable to pay a huge amount of taxes. So it is time to set aside our difference and file the grievance. And personally, central government has a commendable track record to responding to citizens' grievance. I have filed grievances for personal issues as well as for a public issue. When it's a public issue, they appreciate the suggestion and they will say that they will reconsider. Sometimes they reconsider, sometimes they won't. But it's all depends on volume because we are in a democracy and volume counts. So as I said, by raising grievance in large numbers, you can make your voices heard. And when it's raised in a collective way, then only it can make an impact. So you might be wondering, okay, I understood digital transaction tax. I know that there is a portal to raise this grievance, but how can I write a convincing letter to the prime minister or the finance minister? So that's where you have to make use of ChatGPT. ChatGPT is a large language model. It's in its initial stage. So please use it carefully. It can give out errors. It can give out hate speech. Don't simply copy paste whatever it generates. It's your responsibility to, while using it as an assistant, please review what it generates. So I'll show you one example. So this is how I have given my prompt. I told, this is my past grievance and help me write a digital grievance to Honorable Prime Minister and Finance Minister requesting for implementation of DTT policy. Kindly highlight the fact that this policy is a win-win taxation policy and it will greatly act as a catalyst to nation's growth. So with just for this prompt, it gave in 300 words, it generated a letter for me. So this is how you can leverage large language models of AI. They are really good at least this aspect. So please make your points and file your grievance. And then once you get a grievance, you will get an acknowledgement. So before going to my last slide, I just want to highlight that simplicity is the ultimate sophistication. So simplicity represents the digital transaction tax and its low percentages. Sophistications represents the challenges with the direct and indirect tax that we are facing. And that can be the ultimate sophistication, ultimate replacement for direct and indirect taxes. So I see digital transaction tax as that simplicity, which can become the ultimate sophistication. So thank you very much for listening to the entire slide. So before you can fast forward it all the way till here if you have seen the prerequisites. But if you have any specific questions, I can take it up now. And your grievance is, this is how you will get an acknowledgement when you raise a grievance. But yes, to make this is the only legal legit way out. If I tell share, subscribe, publish on your social media, you can do that, but you will get an acknowledgement only when you file a grievance. So this is my YouTube page, youtube.com/Bharath Kunjibettu with that symbol. Feel free to like, share, and subscribe this video. And I'm open to taking any questions related to digital transaction tax. And before closing, you can also feel free to put it in the comment section on your questions. I'll just work with the Taxguru team and try to find out an answer to that question. So thank you very much. I hope you like it. Before closing, sorry. I'll stop sharing and I'll just share all the links that I have used. So